Hey, Dr. Jeffrey Scott here. This is the weekend market update for November 29th, 2025. Now, this is my biggest holiday day of the year, and I'm not referring to Black Friday, Thanksgiving, whatever we call today, except for busy malls. I'm talking about the battle, the war, the big enough issue that HBO has a specific special, and that's the war between the University of Michigan Wolverines and the Ohio State Buckeyes, which is about an hour from now. So I will get this video out because I plan on getting inebriated during and after the game, whether I'm crying in my sorrows or celebrating five in a row. I think this is a year that it might be the former. The question is, will short-term oversold warnings pressure the broad-based year-end rally? Pressure doesn't mean break. Again, my name is Dr. Jeffrey Scott. I am the Market MRI Pro at gmail.com. My Google group is called Top Down Trader, which takes on special meaning this week because you might want to join and get something I did yesterday. And the website is marketmripro.com, where I've started releasing under, I think it's under training, more and more videos of how to use my program. As always, this and all videos are for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. The intent of the video is to demonstrate really my tools of top-down analysis and how I apply them. Trading involves risk, and you alone are responsible solely for any decisions you make. I may own or intend to buy or sell any stock I mention in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors. I have tools in many different platforms. My style is consistent, whichever tool I use. And the Metastock add-on launched this week, and there's special pricing. You have to go through Metastock, and it launched as the guess or the launch add-on with the version 20 upgrade, which is pretty awesome. And I have a video with them I'm doing live either Wednesday or Thursday. And if you haven't gotten an invite yet, it's because they haven't sent it yet. It's coming out probably on Monday. If you're looking for the wealth charts video, I still support that. Problem is, I've been traveling. I had two weddings over the last 2 weeks. One of them was the big fat Indian wedding that occurred in Udaipur last weekend, which we had Jennifer Lopez as a secondary entertainment. I'll just put it that way. If that's secondary, imagine what else was going on. I'll try and get a video out for wealth charts before the open on Monday. My Google group is called Top Down Trader. You just go to Google Groups, you sign into Google Groups, you go to all groups, find Top Down Trader, and let us know how to contact you. It is free. I often give discounts to Top Down Trader members, and then I post things there, such as the PowerPoint and the video of my Black Friday educational and selling session that I won't publish on YouTube. And why? Because I got a little verbose in discussing my performance and showed you my portfolio and my data, and I don't think I need to share that to every Tom, Dick, and Harry. Is there a recession in our near future? There's always a recession. I don't need to spend much time here because it's not imminent, but whenever we cross below zero on the yield curves, and then we cross back above, you get these gray bars, those are recessions, and they occur sometime after. So we're late, but doesn't mean it's not going to happen. It's always happened going back to the 80s and before. If you look at credit tightness, it can start to occur before the recession and maximizes during a recession. We don't have any. In fact, if I looked at a very short term, you'd see it actually came down some this week. And if you look at the Philadelphia Fed, you don't usually get recessions unless your diffusion index of economic activity is less than 20. That is one that's not been delayed. It was just minus 1.7 on the last reading, which was about a week ago. What else do I like to look at? I think the markets have priced in a rate cut. I think we saw that this week. It's really about what the last Fed head who spoke said. And the last one who spoke suggested that there was room for a cut. And you could see here in the four bars over the last one day it was steady, but over the last 10 days, it increased the likelihood, and they're now expecting it over 80%. Boy, if Powell disappoints, how far will the market fall? I use something which we affectionately call the E-index, naming it after Ian Woodward, who created it and basically said, when the market's getting high and extended, create an artificial index. And in that index, put 15 to 25 leading stocks at that time, stocks that have run from the lower left-hand corner to the upper right-hand corner of the chart. And then monitor how they do. And when they break down, they typically break down before the overall market rolls over, and you create an artificial index to monitor them. So we bent. We traded below the 50 for a day, had a hammer, got back above it. So I still think it's in play and poised for new highs. Know your earnings and news. The yellow are old things. They're going to matter because we've been in a data-free zone. Data starting to come out. We got Powell speaking Monday, and then we've got Michelle Bowman testifying on Tuesday and Thursday. Other than that, we're going into a quiet period, and I believe the Fed meeting is on the 10th. Hopefully, we'll get the cut. We will get stuff that matter. We're going to get jobless claims and ADP employment. We're going to get some ISM data, and then we're going to get some delayed PCE data, which will be interesting to see if that means anything because it's 3 months old. On an earnings front, definitely slowing down, but you got to know when your stock's earnings are, and it's bad judgment to not. I can tell you, Credo was one that I liked a lot, and then I saw its earnings are after the close Monday. I don't enter going into earnings unless I have a massive edge, like related to seasonality or something I shouldn't have. Metastock Market MRI Pro is launched on Metastock. Now, why would I launch a product that's being sold for $597 when I have a $2,000 trading app? One, it's a democratization of tools. I don't care what you use them on. I want you to make money in the markets and improve your performance, and I think my tools can help you, so why would I limit it? But there are clear-cut advantages of the Metastock that I don't have. It's got streaming real-time quotes. That's important to a lot of people. Streaming quotes are expensive. You're going to have to pay for Metastock's charting platform and $1,000 for their data before you even get to my app. But more importantly, I actually had two people reach out to me from Australia this week for questions about the package they bought. It has data for India, Australia, and the rest of the world. I love the fact that outside educators can create things for Metastock, and um, now, once you purchase those other outside tools, you can combine things. It's a very stable platform. It's been around since the DOS days. And I put in a lot of the features, but not everything from the app. One thing that's going to be the same across all programs is going to be um, the indicators, the timing models. They use a thing called explorations, which is their scanning, and they've got things I don't have elsewhere. But what they don't have is the full feature set of breadth because some of it Sager does already, so I have to reproduce that. But it wasn't part of the initial package. The other thing is the scanner that I have, which will probably come into Metastock within the next year, but it will be, if you know Metastock, there's a thing called the RMO ATM, which is powered by the Metastock data, but it actually sits next to Metastock and gives you a radar screen functionality. Why do I have multiple platforms? Well, here's the dirty little secret. I love my tool set and what I do, but I am like most of the people listening. I'm an independent individual. I can do whatever I want. I don't have a brand. My brand is I'm effective at making money, but I do it with the things that I like. Some of it's mine, but I also have a strong affection for Sagar Nandy's tools and John Person's tools. And when you look across the major platforms that I use, you'll find that the only platform that has all of them in it is TradeStation, and that requires not only the opening that account, you've got to purchase an app from through me from one of my partners, Van, which include ties my stuff and Sager stuff in a unique scanning tool, but you also have to purchase Sagar's set and John's set. Um, in some programs like HGSI, John has put his stuff for purchase. In TradingView, you have neither. In Metastock, you have Sagar's. Well, I've now launched John stuff, and we'll talk about that in Market MRI Pro. And that was part of why I did a Black Friday event to kick that off. Sager's toolset, superiorprofit.co. I've been using it for probably 15 years. It is great stuff. And John's stuff probably started 2008 or 9, so a little bit longer at personsplanet.net. So we did have a Black Friday special, which I'm opening to anybody, not just the people who are on the webinar, but it will expire at 9 a.m. on Monday. I normally retail the Market MRI Pro at $19.95. When I launched it in March, I had a number of different ways of discounting it based upon prior purchases and things like that. Those are all done. The Pool has grown 50% or more in productivity since I launched it. I've kept the price the same at the top level. I'm not going to be discounting it below this level at any time. So $14.95 reflects all available discounts. And then I have brought the fee down from what we thought would be $5.95 to an annual $4.95 after the first year. And what does that pay for? That pays for data, updates, maintenance, and support. Why would you want to pay that? You're thinking, I'm buying this. Why do I want to continue to pay rent? Kind of like buying a house and paying real estate taxes. Well, the reason you're going to pay that $4.95 is to keep me in business. And what do I mean by that? There have been some great companies, Magenta Trader, Best Choice Software, to name two, that had very high cost one-time purchase options, much higher than $19.95, and that gave you software and data for life. Well, 3 or 4 years down, everybody that's going to buy the product has bought the product, and there's no revenue coming in. The companies went kaput, leaving us users with a pretty package that doesn't work because there's no more data. We're going to avoid that by not charging $5,000 or $10,000 up front and promising lifetime, but rather charging a fair price both for upfront purchase as well as the ongoing fee. As I mentioned, we also launched John Person's Alpha Algo Scanner toolset. I don't want to go too much into detail. This is John's product, not my product, although John and I are good friends, and I think you're going to see expansion of that and some joint education. But he saw the value of our platform, the stability, the speed of scanning, and a radar screen-like tool that can hold thousands of stocks at a time and be stable. And you have near instantaneous scanning ability. If you want to know more about it, you're going to have to watch the video that I did this weekend. Basically, the scanner here had 3,700 stocks. If you're familiar with his work, you know how brilliant he is. This is a guy who, if you look at his career, it's hard to fathom how one person could accomplish so much. He is an author. He's been invited throughout the world as a keynote speaker to talk about trading and his tools. He owned a futures brokerage at one point. He has developed some very impressive and incredible tools. I said I bought his package in 2008 or 9. I bought that tool set, which he continues to improve. He's great in front of the podium. His books are good reads. He's a good friend. How? Because I went and knocked on his door 10 years after I bought the program and introduced myself to him. And we've been buddies ever since. But I'm so thrilled to have access to this. I already got it at every other platform that he sells it, but there's some unique things in what we built, and it includes his breadth as well. So that is going to retail for $26.95. He did offer it, and I've got a limit of 15 that I can sell. And that sounds like a bunch of BS, but it's not. Um, Similar to the Market MRI Pro, I knew when I launched it that it needed to be broken. And what do I mean by broken? It means I need more than just Praveen and John and I using it and trying to have it screw up so we can find the bugs and fix them. So we are going to open it for sale for up to 15 people. Probably 12 have already bought it. It's going to be $19.95 for the upfront, and then it's $6.95 per year to support the data, maintenance, etc. Um, I I could call this a final version, but you know what? None of these programs are final versions. Metastock, it's in version 20. It's not beta, but things are going to continue to improve. But I want you to think of this if you make the purchase as a paid beta, and that you're paying us to get access to it, but you're also going to be helping us and helping yourself by helping us find things we can do better. Um, I'm limiting it because I don't want to educate you on the indicators. I want you to understand the already going in. It should be current owners of Market MRI Pro or people that either have been to John's seminars or have his lifetime TradeStation tools. Um, we will have a full launch, but not any price lower than this, if this low, um, probably at the beginning of the year. Now, if you are thinking, Jeff, you're going to charge me $6.95 a year for John's tool and $4.95 for yours, so that means you're going to charge me $1,200 a year? No. If you have both, I'm going to discount it 200 on both and bring you down to 895 for a year. Actually, it's not 400 for both, but it brings it down a little bit from what would be, yeah, I guess it's 1190, but it's going to be 895 for the combination. So you can get it today with the freestanding tool, and we'll, we will turn on the person indicators within the Market MRI Pro as well. But hopefully, rather than having two tools on your desktop over time, and that's the plan, we will consolidate it into a single program with full integration. If you are interested, stop the video, and I made it very simple. You got the HTTPS, whatever, the colon, tinyurl.com, which is a standard way of shortening it. And that's the Alpha Algo Scanner launch for the Alpha Algo Scanner beta launch version, or it's the same beginning URL Market MRI Pro Black Friday for mine. Link will expire at 9 a.m. And all you got to do is contact me at the marketmripro@gmail.com with any questions. Now, if you want to see in depth my process and my my performance that I've done in a model account, which is now $1.2 million and started with 150, although I did add some money along the way on the year. I added a half a million when I doubled the first 150. But if you want to see how I've performed and how I use the tools and get more in-depth learnings, you're going to have to join the top-down trader group, and you'll see the title of the video I think it's about the Black Friday special. I'm not putting that on the broader internet because it does go over performance. See you in person, and there's no pun intended there. In 2026, I always do a meeting in June in Orange County. Hopefully, we'll continue that. It's organized by others, but there's probably enough interest to do it, even if they don't want to do it. But it won't be the same $300 to $400 if I have to go rent out a hotel. In Palm Beach, I'm going to do one in October and November as well. In a city around Palm Beach, no one wants to pay Palm Beach prices for the hotel, so hopefully get to see you then. All right, that was way too long of background talk. Let's go into the presentation. We got 38 minutes to the war between Ohio and Michigan. If we look at the performance of the market, I like to start with market breadth. You could see Bitcoin was up 1%, although it was down from the open, it still finished the week up 5%. Is Bitcoin done going down? I hope so. And boy, I wonder if what would have been like if the NASDAQ fell the same amount as Bitcoin. It would have been painful. If you look at the indexes, they were all about the same from 0.55 to 0.81, all finishing near the top of their daily range, and all on super low volume. No surprise, it was a holiday week, half day anyways. The dollar was down a bit and volatility was down. The new highs minus new lows at 52 weeks on the NYSE and NASDAQ have started to recover, and they're being driven not by a lot of new highs, but they're being driven by the absence of new lows. So I guess that's a good thing. I love this tool on the right because it takes the markets of the S&P 1500, the NASDAQ, and the NYSE. The color is Friday. The gray would be, in this case, Wednesday, and it shows you that most of the sectors were up, most of the industry groups were up, and interestingly, a little weaker on the S&P, stronger on the NASDAQ. But most importantly, the third one is what percent of the stocks were up: 60, 60, and 63. A strong day, but not an overly exuberant day. And then down here, I don't talk about this every day because it doesn't move that much. It's a number of stocks above the midline of their Bollinger Bands. In an uptrend, and that midline's the 20-day moving average, by the way. In an uptrend, stocks will typically go from the midline to the top of the bands, back to the midline to the top. In a downtrend, they'll do the same thing, except they'll go to the lower, retrace to the midline, then trade lower to the lower of the band. So the percent of stocks above the midline tells you how many are in a bullish posture. And we've got 77, we've got 53, and we've got 70. So we have the majority of the stocks are above the midlines. It's a bullish looking market right now. S&P 500 sectors, and we'll probably come back to talking about it later, but energy led. Energy was the only sector up 1%. The only sector that was negative was healthcare, minus 0.49. So the sectors were kind of consistent. And if we look at over the 5 days, where were the big wins? And there were some big wins. I mean, if we look at over 5 days, best fit, you could see discretionary was up 6.92, materials 5.85, tech 5%, communications almost 5%, financials 4.3, healthcare 4.11. Everything was up over 5 days. And even though energy looked good on Friday, it was only up a little bit more on the 5 days. So that's pretty cool. If we look at themes, let's go back to the 1 day change. And the way I clean it up is I just right click and then left click on best fit. If we look at themes, we were led by gold, silver, copper, blockchain, fintech, solar, gold, clean tech, metals, minings, data centers rebounded, but they're still down over 6% on the month. And if we look at where weakness was on Friday, the only two things were down were Southeast Asia, ETF, and retail, which, although it was down, it was up 9% on the week. So we had a good week. Other big moves on the week: home construction was up 10%, and genomics and biotech were up 10%. Anything else more than that? Let's see. Now, I don't see. Silver had a massive week, was up almost 20%. Cannabis, I don't pay much attention to. Gold 14, blockchain 12, copper 11, metals and minings 11, home construction 10, biotech 10. That was a pretty strong week. And is it surprising? No. We came down, we hit the 100-day moving average across the board, and we reversed. And we had a nice holiday week, albeit not on great volume, as you'd expect. Timing brief reflects what we just saw. If you look at the daily charts, we are in buy modes on each of these. So the short-term signal is long. We took out perhaps short-term trend line resistance on all but the diamonds, which didn't have an obvious trend line to right. And we are within 2%, I believe, on all of them of all-time highs. How can you be bearish there? I will show you some short-term reasons to be bearish And it probably has to do with, well, just look at the Russell. Things do not go up in a straight line. And we have seen 1, 2, 3, 4, 5 days in a row on each of these of almost a straight line. The market's got to take a breath, and we'll give you some data in a few minutes to show you the concern. The weeklies, we are approaching new highs. Look at those weekly candles. This was a massively positive week. If we go into the index ETFs and we just look at them quickly, Spider broke out. Its seasonality is still okay. Now, as we get towards the end of the year, the seasonality has a dip going into Christmas Eve. Don't know if that's going to be a problem or not, but we still are in okay seasonality. Um, Here is the 100-day moving average. Notice how it traded down. It held here on the 20th, and then last Friday it reversed there, and it's been up 5 days since. Is there anything not to like here? I'd say the answer is no, and I don't think I can draw a trend line here. Maybe we'll see if it sticks. That's the thing that bothers me. What bothers me is the fact that we have no volume. But is it because no one cares or because everybody's on vacation? I think it's on the latter. Q's, same thing, no volume, looks good. Same seasonality picture, a little bit of dip into the Christmas holiday, but nothing negative right now that should, except for what I'll show you on the short-term overbought stuff. If we look at the diamonds, again, not far from all-time highs, still got okay seasonality, no volume this week. And that's just the theme. The markets look great. The volume was bad, which is expected. Couldn't tell if I wanted to draw the trend line at the close here on this bar with the big wick or at the top. So I drove it both ways, and either way we broke out. Again, on low volume, and that being the Russell. Everything's close to new highs. Everything looks good. Of course, no, we don't live in the land of nirvana. We're going to find some fleas somewhere. Still elevated off of prior resting areas, but it's hard to get upset here as the VIX futures fell 4.89 and are getting closer to where we want them to be if this market's going to continue to go higher. And then lastly, we've been talking about some dollar weakness. So, uh, when you look at this chart, it looks like the dollar has been on a big run. It kind of dropped, squeezed below the trend line here, closed below the 17. Is it going to drop to the 50? Perhaps. But the more important thing to me is to look at where the dollar is compared to where it was. Yes, we've had a bounce off the consolidation at the low, but that bounce is nothing compared to where we were. Commodities also participating. Gold and silver both had strong sessions, and both, well, silver is now at an all-time high, and do you think gold might get there? I do. If you look at oil, it's struggling here, and now you've got some auto-generated trend lines, or Jeffrey-generated trend lines, I should say, a 200 and a 50. So to get above this area is going to take a lot of work by oil. I don't know if it's going to do it. Um, but we did see energy do well on Friday. Natural gas is very different, and as much as I like to call it dead to me because of that slide right there, it has been rallying, and I think a lot of the rally is the hope that we're going to start shipping in volume liquefied natural gas to Europe to replace the Russians, and that should cause both utilization and volumes to go up and price. If we look at rates, and let's just flip this to a weekly, because I think weekly on the rates will be more meaningful. And you could see on the week, it's a white candle, which means it was up on, it's still giving me daily. All right, you know, I discovered this the other day that on these multiple chart things, we're having a little bit of an issue. I think that Praveen told me he fixed it, but hasn't sent me the new version. So we'll look at it on the daily, and the daily 10-year was up 0.43. Now, if you look at 1, 2, 3, 4, 5, we were down below the 50, and we're bouncing here at what's been where we bounce every time. So I think we saw a technical bounce on Friday on the 10-year and the 30-year, and nothing exciting is going on there that would concern me. Buckets are neutral. I'll leave it at that. The market briefing, what I think is interesting is what is this thing going on here? And we did have a significantly lower low here. We're going to see if we get a higher high. And then I went where I could draw trend lines, which is not in this layout because I don't want to mess it up. And I started asking myself, are we getting into a megaphone broadening formation? I don't know, but I know that we failed 1.5, 2, 3, and will this be the fourth time that we fail at that trend line? So that was one thing that I'm going to put in the should we be concerned column. What else? We've had a big move, and we're not at the range where we reverse on the stocks above the moving averages, but we're getting closer. Um, I love the next three because the new high, new lows are starting to paint positives, as are the AD lines and are the up-down volumes, which supports the markets going higher. And there's no new signals down here that should concern us. If we look at the bigger breadth, which is not a standard chart, but I showed people a few weeks ago how to do them. And in fact, you'll notice under here that I've given you each of the charts. You just got to create a 4x4, put the right indexes in, and then match them up with the underlying indicators. And the thing that I'm watching closely is this 0.97 on the S&P 500 and the 0.96 on the S&P 1500. That is a short-term overbought indicator. I have a hard time not expecting us to have a bit of a pause here. It doesn't mean the beginning of a bear. It doesn't mean that we're crashing. But when you're the most extended to the upside that you've been or getting close to it, you typically revert some to the mean. Not so much on the NASDAQ composite, which is 0.73. And the Russells also had a big runs at 0.91. Is it a game breaker for me? Did I sell all my positions on Friday? Absolutely not. But I think we're higher at the end of the year, but it wouldn't surprise me to see us a 1 or 2% here, maybe retest those new trend lines that I drew, pause to refresh, and maybe we just accomplish it all by market rotation into some of the less extended areas. But I do think the things that have been leading of late might pause a little bit. If we look at, yeah, I don't want to go to talk about John stuff right now. That's everything print. Okay, let's go and look at the JAS layout. Actually, we'll start at ratio charts. And the ratio charts is just to give me a glimpse of, in the upper left is Bitcoin and everything else are in S&P sectors. All of them are ratio charts compared to the spider to sort of neutralize their individual amounts and just to get a sense of what things are outperforming the spider and have there been any recent changes. So discretionary, which has been horrible, has bounced. Tech looks like it's starting to bounce. Healthcare has been super strong. It actually weakened a little bit. And that's the kind of things that I start to look at. Materials has been moving off the bottom for a bit as well. Um, there's rotation all over the place. And what's different now is it's very different when we had two things leading. Now, I also like to play other games. And so I decided to build a grid of Bitcoin and the actual sector charts, and then apply my timing models over them just to see if that gives me any insight. And what was interesting on Friday, the market closed with only healthcare in a buy. You can see healthcare has just been on fire. But look at how many green shoots in the buy signals we see, as now half of the sector ETFs rallied enough this past week to put them into a buy mode. Not the kind of concept that tells me it's time to short. I also took some of my favorite stocks that I like to follow to see what the timing model is doing with them. And I think the things that stood out to me We're in the mags category. Amazon just turned positive. Apple's been doing okay. Google's been super strong. Meta's showing a positive change. Netflix, which has positive seasonality, I don't buy it on seasonality. I buy it on positive trends to the upside. It's going to have to turn to a buy before I'm going to play that game. Tesla just flipped to positive. Nvidia, a lot of counter currents. Google's chips, what's going on with China. They are the heart and soul of the AI boom. And with all the conversation about AI blowing up, so Nvidia has pulled back some. Microsoft, Microsoft actually was up 3 days in a row after really struggling. We'll see if it can clear its WMA. And then quantum computing, which sold off hard, showing a little bit of interest there. Data centers is trying to, and data centers really led this market higher. And you could see the moves that some of these things, all these have had. But data centers, let's just give 100 bars here. That might be too many. Data centers are struggling. Why are there two lines there? All these people on IBD Live, which I follow all the time, um, talk about the 21-day exponential as being support, and you got to watch the 21-day exponential. So that makes me start to feel like maybe I'm doing something wrong. And then I put the 21-day exponential on the same charts as the 30-period WMA. And I also pointed out that if I stuck the 17-day, they're all simple. They all look the same. So the 21-day and the 30-day WMA kind of consistent there. Let's go in the JAS layout and do some looking for stocks in the remaining 10 or 12 minutes that I'm going to do this for, because it's time to turn on the big screen, get myself comfy, make sure everybody else leaves the house so I don't scare them when I scream and the highs and the lows, and get ready for that war. All right, so let's just go into, let's start with the base symbol list so I can tell you what I put in there. I'm going to reset because it seems to be, oh, it's sitting over the Praveen. I got to get it over to the, all right. So the base list, which is, I'm going to start with, has 3,738 stocks. It has more or less each day depending upon the markets. It looks at the stocks in the NASDAQ composite, the NYSE composite, and the Amex composite, which is owned by NYSE. It then takes all those stocks, filters for $1 and 100,000 shares, because I'm not going to trade either of those. If less than a buck, probably won't trade less than $5, and certainly won't trade less than 100,000 shares. Based upon market day to day, it'll go up and down. In a bull market, it might approach 4,000. So when you look at these stocks, and it's not going to, that's not a stock. So let's just pull up AbbVie, which by the way, I think is at an interesting point. Pull back to the 50. But if you open up the stocks here, you can see fundamentals. If you hover over the lower right-hand corner, you see the story. It tells me the dividend, and I like this one because I like to look at earnings per share change. Do they have surprises, revenue change? And it's always comparing to the like quarter. So this minus 38% was $1031.86 is less than the 216, and that's why it's negative. We know that on January 30th, it's 337, and that's going to be compared with 216. That's about a 50% growth rate. Now, the market knows that, and I think that's already priced in. It's this column here that you don't get everywhere, which was the surprise that I think drives the changes in the stock price, especially on a well-followed stock like AbbVie. But what I wanted to do was open this up here, and it shows you that every stock is going to have a sector and an industry group. So if I have 3,738 stocks and I go look in the top-down performance, I am looking at 3738 stocks, which is very different than the S&P 500, which has 500, and the S&P 1500, which has something close to 1,500. Now, everything was up on Friday pretty much. So let's just look at a longer performance. Let's look at 2-day performance. And the leaders were industrial, technology, and basic materials. When I did that, it dropped to 1262. And that 1262 reflects the stocks in the industry groups in those specific sectors. Now let's do the same thing over here, rate by 2-day momentum. And let's go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So based upon a short-term momentum, not one day though, but a short-term momentum, these 318 stocks are in the top 10 industry groups and in the top 3 sectors. Now, first thing I'm going to do is I'm going to filter for 5 and 500. You might ask, Jeff, if you don't trade them, why do you even have them in the book, in the list? Because I don't know what you trade, and I'm not going to limit things from what you want. Now, I'm going to want to analyze these 124. I might look at percent return and rank by that. You're going to see things that have big returns. I don't know what this even means. Um, but and a lot of times when you see a huge return, there may have been a split. I don't know the story on this stock. BNC, and I'll go down the list. And this has been the theme of the last couple of days is silver stocks have broken out hard. The stocks are not at all-time highs. The metal is. My guess is the stocks go higher. Now, you'll notice these green and red arrows. Since I now have opened up the John Person package for the greater public as an opportunity, I'm going to start using it in mine. And I've already got it built in, but I just haven't used it because I didn't think it was fair to tease people. So it had a John Person buy signal here at the same time that relative strength and OB were breaking out. That would have been a great time to enter. I started talking about it as it broke out above the 50. Intel, can you believe it's $40? Um, SVM, Silver Corp, breaking out all-time highs, cheap stock. So this Credo was one that I was interested a lot when I looked at my analysis this weekend. And why is that? You notice it's got great seasonality. It has taken out the 50, did have a person buy signal. I don't care. It's not that I don't care about the volume this week, but I expect it to be light. Great relative strength versus the OB versus its moving average. Relative strength versus the sector. So it's market performance versus the moving average. Volume is great. The problem is if you drop down the fundamental box, when are earnings? Monday. No, yeah, Monday. I'm not buying something the day before earnings. However, since I like the chart pattern and I liked its fundamentals, and for some of the longer term fundamentals, I'll go into something like market search because this has been a resource that I've used forever. And so let's just put in CRDO and I'll get some additional information here. It doesn't have a trade set up here with the little pivot lines. Let me make sure that's turned on. Alert. Yep. 24% earnings per share growth in 27 slowing down, but look at the earnings per share growth for 26. I always discount the further away ones because things change. But if it grows at 200% and it's a $2 earnings, it's worth a lot more than 180. I was excited by that. I'm not excited by it as much because of earnings, so I put that on a watch list. PAAS is another steel stock, breaking out all-time highs. Um, don't know what this guy does, so all I got to do is hit the fundamentals, filter my little thing over there, cement and its derivatives in Argentina. Cement stocks look good. They're just boring to me, but they looked pretty darn good. Coherent tech play, nice uptrend, pullback. Would have been nice at John's signal. His signals are great. Still buyable up here. I would look at the fundamentals and big surprise. Earnings are out, growing 50 times. Multiples 34. Doesn't pay much of a dividend. And so I will typically go through the list. This is one way of approaching it. Another way of approaching it would have been to look at 2-day momentum and look at the same things. ASML has a great looking pattern here. It's an international stock, so it's gappy because it's trading elsewhere before it opens here. Um, it's just an expensive stock. Here's Credo again. Here's Coherent again. Um, Light, Lumentum, what a great run. Um, we called it down here, actually on this bar. And we started talking about it because it broke out of that short-term resistance, but it had a double momentum buy. My double momentum buys are some of my favorite buy signals. It's these two dots down here. And I love it when a stock moves up and then consolidates into the 50 and breaks out. Broadcom, AVGO had a big breakout here as well. Is Meta ready to start to run? Still in a downtrend, but it's moved off the bottom. ADI is one that looked good, analog digital. And how do I know it looked good? Because I looked at it here when it had a double momentum on this bar, taking out trendline resistance, and it continues to go higher as one would have expected. Taiwan Semiconductor, is this thing getting ready to run? All right, so that's the second way of looking at it. Another way I like to look at it, since I like pullbacks and uptrends, and it eliminates some of the extended stocks, I'll click pullbacks and uptrends as well, and then I will rank them by this up, and I call them impulses. Impulses are breakouts, momentum, volume, gaps, and then I've got something called the EMS and something called the CMR. And the way CPR, and I look at them that the more impulses, the more bullish. So let's just see what comes up to the top here. Loma, here's that Argentinian cement play, SMX. I doubt I have fundamentals on it. Nope. Intel again, something's going on with Intel. They changed leadership. Um, we'll see. Silver is good. Silver is good. ERO, a copper play. Now, all you have to have for a pullback is up here. Your weekly bongo's got to be blue, and you had to have a period within the last 9 bars that you were red and switched back to blue. So there was your pullback, and we would have gotten signaled on this bar here. In this bar here, we would have had breakout momentum, a good relative strength at OBV, CODI, and I'm just going through looking for stocks that look attractive. So that is 3 different ways that I might look at the markets. Wow, Tower looks, what a run. TGB is another mine. Different ways of looking at the markets to find actionable stocks. Now that is what would be referred to top down. Focus on the leading sectors, the leading industry groups in the sectors, and finding the best stocks in that group. I love it. Now, I may have come in today and maybe I think that energy is making sense. And I may have just looked at energy to see if there was anything, and I still got all my filters on, that was exciting. And maybe see PBA. This is potential. And why did I say it was potential? I'm breaking above on relative strength. And how do I know it's positive? I don't have it in this view. Never mind. I've got breakout momentum in a CPR, have a person indicator, took out the 50. But one of the things I liked about this is it pays a 5.5% dividend. And I did notice that a lot of the MLPs were showing up on my scans. RRTRP is another one of the NLPs, I believe. RRC is a natural gas play. And natural gas, I think, is posed to outperform. The one I'm in is Expand Energy, which we got back down here when it had a double momentum signal. Another thing that I will do is I will basically move out of the top-down approach and I'll go back to the impulse. And here I have all, let's take out, well, I could look at all the stocks that are above the price and volume and have a pullback. I can do that same thing um, and start to run through the list and see if anything looked good. Now I'm eliminating the requirement from the top down here. So there's a PBA, which we liked. Loma's that cement play. I like this one a lot. I'm not a giant fan of buying a lot of biotech names, even though I know biotech. And sometimes I will just do this when I want biotech. And I talk about it all the time during the week. So let me just say it one more time. When you buy Kimberly Clark or you buy Ford Motor or even Tesla, Tesla's a little different. When you buy Amazon, you know there's going to be four events during the year that are going to massively move the price. You can look them up, you can be prepared for them, and you're not going to be blindsided. If you look at a biotech, especially a small company that does not have earnings or revenue yet, that's relying on an approval of a drug, let me tell you what else you get. So you got four earnings reports, which are typically more moved by the update on the science than they are on the earnings. You also have to deal with the fact that there are multiple conferences for every specialty. In oncology, I go to probably 8 different conferences per year. At each of those 8 conferences, these companies that are cancer or blood-based drugs are releasing data. How will you know when those conferences are occurring? Oh, and by the way, it's not that when they present it, it's when their abstract books come out early, which give you a hint. So that's 8 other times a biotech can have an event. And oh, many of them that are bringing a drug to market have advanced clinical trials called phase 3 trials, and they report out whenever they want to report out because the data is done. So that's another 2 times a year. So that's 16 or 14 times a year that you can get burned. And then you have drug approvals. So that's 15 times a year you need to know for each of these versus 4 to buy Kimberly Clark. Now, the bigger the company and the more the earnings, the less important an individual drug announcement is going to be. So why would I buy a biotech unless I have some really good idea that they're going to win? I'd rather buy this. And you'll notice the Wolfpack phenomenon of Ian Woodward. Stocks that look alike seem to act alike, and they go up and down together. I've just been long LABU for months now instead of individual names. And by the way, I'm in healthcare and I'm still afraid of some of these. FDMT is a great setup. And if I wanted to buy an individual name and it is on my buy watch list, then I will buy an individual name. And you can see I marked it up. And hey, John's got a signal as well. VZLA, Silver Play, TRP, I believe that's an MLP. Well, I just got to do is highlight here. It'll pay a dividend if it's an FLP, 5.83, and then down here it's a pipeline. Safe plays. Here's that cement. Here's a natural gas. Here's a best short of my life. mRNA, when it hit 500, which was a while ago, I'm looking at the stock and going, there is no way that this stock is going to stay at this level. They have nothing when you take away COVID and every other virus in history runs its course. And notice we still take vaccines, some of us. I do. I'm in healthcare and I'm not, no way I'm not going to take that vaccine. Stock died. Is it going to ever get back there? I doubt it, but could it be something to play? Yes, still below the 200. Manulife Insurance, nice looking chart breaking out. What's the dividend like? It pays a 4% dividend. Had a nice earnings surprise. The earnings are out. That's another important thing to know. So I might go through that list, but I'm lazy. Not really, but I'll pretend. And I want somebody to hand it to me on a silver platter. So A plus, best scans I have. How many times did I talk double momentum? Double momentum. So the A plus scan is based on the double momentum plus a few other filters like relative strength is better than the market, good volume in an uptrend. So EXK is one that I've talked about for days, and this is where I got into it after this move. AG, similar story. XEL, which I think of this as an engineer, a utility story that might support some of the data centers. I like this breakout here. Um, Double momentum is my favorite signal. It's been what's been working. It pays a 3 something dividend, 3.09. Earnings are out, so they're already reflected in price. I liked XEL. And then CDE is another metal and mining. This was just a simple scan. My traditional pullbacks and uptrends and then breaking out scan is the A scan. So this scan requires a little different. It requires you to have a squeeze. Look at FDMT, have a squeeze. You have either a momentum or a breakout. Better to have both. That relative strength is breaking up, as is OBV. FMD, MT, RRC we saw before several times. Natural gas, GPCR, which this is a healthcare. I don't know anything about this stock, but it's got the pattern. Arco, which is a refiner, and I thought, well, actually, this might be different. What is this Arco? This Arco is a McDonald's restaurants. All right, not my cup of tea. Pays a bit of a dividend. Here's XCL again, and then one that looked like it was setting up is Run, which is a solar play. And to me, the best solar play is First Solar. I am in First Solar for full disclosure, and it looks great here. I look at it since Friday, but it's in a beautiful uptrend. So that's how I look at the markets. That was a lot of time. I don't spend that much time during the week because I'm not talking on anything I'm doing. Another thing that I'll just do very quickly is I'll show you some of the stocks that I put into my buy watch. I don't just buy things that I like. I'll put things in a list. I'll pick my top five, and then I will build prospective orders, and then they'll sit at Thinkorswim and see if they get filled. And I do it that way for a reason because I got 3,000 employees and I'm working. So things that we haven't seen, well, here's Advanced Digital. I like this one here as a new breakout, analog devices rather. AHR is a high relative strength stock, and I like to find things that I can draw a line across the highest highs and show a breakout. So this is what I'm interested in. Here's AG. We've seen it several times. I'm not sure if AMD's ready to buy, but it's pulled back to the 50 and has a John Person buy. Bump, bump, bump. BE was a big flyer in the data center energy play. Sitting back on the 50, which we call free parking, is often a place to get involved. Seagal was one of the gold stocks that we talked about during the week on my weekly videos. Carvana, I don't understand how it does so well, but it showed up on my scans and was an entry earlier in the week. Still looks interesting. I think this is one of the best looking charts right now, FDMT. GLBE, which I think is Africa e-commerce. This thing had a nice breakout. I've know some smart people that like this. One that I bought, no, this is the African one. JMIA, I bought on this breakout here, and notice it had the double momentum at that breakout. And housing stocks, they were up 10% as a group this week. Lennar, Pulte, um, and Toll are all on my list. If you like bottom fishing, Lulu looks like it's waking up with a double, not with double momentum, with a John Person buy. Micron, great earnings per share growth. Pull back. Is it giving us a chance to enter? And then anything else? VRT, another data center play that has pulled back like most of them. And to give you, and then I really like that XCL that we've looked at a couple of times, and one that will be on the list. It's got the double momentum. It took out a trend line. I think the ultimate data center story of a company that makes no money but is a great story because the nuclear is OKLO. And I'm just putting it here because I think it's interesting, and I didn't draw this trend line before, but it's kind of like it's coming back to its long-term trend line area. This has been a place to buy it in the past. I'm not buying it here until that relative strength improves. Hope you like these videos. Give me some feedback. I just missed kickoff. No, it doesn't start to probably 12:10. That's where I'm going. I'll put the video out at halftime. Have a great weekend. Drive safe. It's still a holiday. Hope you had a great Thanksgiving. And thanks for all your support. Give me some thumbs ups and subscribe and come join Top Down Trader, and you can see the performance I've had this year, which will surprise you.